in real estate on your own can be expensive, it can be stressful, it can be risky, it can be hard to be diversified. But there are a couple of platforms out there, a couple of different options in which you can get into the market without spending a couple $100,000 and doing it all on your own. One of them is called Addy. It is an app that was created by some folks in Vancouver, and we're going to talk to one of them today. Stephen Jagger is one of the co-founders of Addy, a site that enables people to invest in real estate across North America. Stephen, hello.
Hello. How are you? Thanks for having me.
Tell us how Addy works. How does it work?
Yeah, sure. So we are an online investment platform that enables sort of regular people to be able to participate in the ownership of institutional commercial grade real estate. So how it works is, people can set up an account on the platform, verify their ID, connect a bank account or fund a wallet with Interact, and then real estate opportunities come onto the platform. They can view those opportunities, read the offering document, see some of the due diligence, and make an investment decision. The platform enables people to invest as little as $1 into a property. The purpose of the dollar is not really meant to be like a marketing shtick. It's more around, we're trying to eliminate barriers to entry so everybody can participate. And if we said it was minimum $500 and you had $400, and all of a sudden Addy itself is the barrier. So by having it at $1, people can choose an amount that works for them, that's prudent for their world of their personal situation, and make a decision and choose to participate.
I did an interview with a company called Graybrook a couple of weeks ago. Their lowest, their price of entry is not $1. I think it's $25,000, and a very different service. Their compensation model is different. With that, though, as a starting point, in addition to the low fee, what is similar and what is different from one that requires a much higher dollar rate?
Yeah, so Addy's a technology company. We're a software platform. And so most real estate operators have some sort of minimum investment, 25 grand, 250 grand, $1 million. Like that's generally how it works. It's the world of investing in this category is reserved for wealthy, accredited investors. And not only that, they also have to be in the know. You have to have access and know that these opportunities even exist. So it's generally kind of a thing that's hidden away, that happens for a handful of people that can participate. And what we did is we built a tool. We built this platform to eliminate all of those concerns as to why the 25,000 or whatever minimum exists. It usually exists because it's hard for them to deal with investors. Investors cost money. Creating the subscription agreement to get it signed, accepting a wire costs money. You get charged to accept the money. Doing the tax slips at the end of the year, dealing with investor updates. All of that costs the company money. So most real estate operators or real estate developers would choose to have less investors for bigger checks. And what we've done is the Addy platform essentially eliminates all of those costs and concerns, automates and streamlines all of it so they can have 10 investors or 10,000 investors. It doesn't matter because the software is moving the money, the software is generating subscription agreements, the software is creating the T5 or T5013s. It's all of those pain points have been automated.
Right. I was on the site. There are a bunch of options. There's, condo complexes. There's some value add projects. How do those deals come to you? And how do you determine what you're going to put on the platform and what you're not going to put on the platform?
Yeah, it's a great question. So there's kind of two sides to that question. Is real estate operators, real estate developers now come our way. They've learned and seen what we've been doing. There's been 42 opportunities have come on the platform thus far. And so the word is out as to what the software can do for them. So there's kind of two ways our system works. Real estate operators license our software to run their issuance. They can choose to have that issuance be private, meaning nobody would see it. It's just for their handful of investors. They're going to do their own thing, but they want the automation of our software. Or they can do what's called a public issuance and, again, license the software and then choose to make it available to Canadians across the country. How and why they're coming to us. They're coming to us generally for those automation rules or reasons. One example would be one developer in Vancouver originally came to us. He was trying to figure out how to enable his employees to participate in the building that they're buying and running, or the building that they're actually building. Like, how do they get not only their accountant or receptionist or whoever invested in or give them the opportunity to invest in the opportunity. But how about the trades? The people work with the tools in their hands, actually building on the work site, and so lots of them come our way because they're just trying to do that. They want to have their team be able to participate in the potential upside of these opportunities.
Do you vet the deals, or do you vet
yes.
the opportunities? Okay, how?
Yes. So the second part of your question is we vet. First, we're looking at this from understanding who the operator is. So we try and understand what's their deal, what's their skill set, have they been sued in the past, what are they like in operating, these types of buildings? Do they know how to build a 30-story tower if that's what they say they're going to do? It's like, have they done that before? How have they dealt with past investors? Just sort of that whole thing around who are they and what's their reputation, what's their skill set, all that. And then we underwrite and look at the opportunity itself. So what's the deal? What's the property? They send over, they upload their environmental documents and appraisal documents and all that kind of stuff so that our real estate team can underwrite it and try to understand both sides if it's a fit for the Addy platform. Once we've sort of made the decision and they've made the decision that they would like to move forward and make the opportunity available, then all of that information shows up within the platform. So Addy members, when they log into their accounts, they can see an opportunity that shows up. Their job is to read the offering document, understand the risks, and then make an investment decision. So they can see some of these underwriting and due diligence documents. They can see the appraisal or whatever happens to be there. The individual investor can see that information, read the offering memorandum or the crowdfunding document, and then make an investment decision.
How do you guide people to think about return for the properties that are on Addy? And I use the equivalent with Greybrook that I'll use here. People have a sense for what the stock market delivers over time, whether you call it 5% per annum or 6 or 7 or whatever. It's in that range, and history bears that out over long periods of time. It's easy to get that data. I know that future returns are not predicated on the past, but how do you provide people with some sort of an apples to apples-ish comparison of what they might expect to return if they invest on your platform?
Yeah, so there are projections that are built into each opportunity. So the issuer, the real estate issuer, can, when they put their opportunity online, they also put their projections as to what they project or estimate that the returns might be. Each one of these opportunities is totally different, from building a development, building a building, versus buying a cash flowing asset that's a shopping mall or a multifamily apartment building or whatever it is. But they will have their projections built into the offering document as well as the prospectus, and that's all broken down so people can read and understand what the issuer is thinking about and what they're projecting that this opportunity might do into the future. Our software then, there's a calculator in each issuance. So depending on what numbers the issuer has put into their opportunity, there's a calculator that shows people, if you invest $1, what does that mean for this specific opportunity? $100 or $1,000, $10,000, whatever your number is. There is a calculator that kind of breaks down what their return potentially might look like.
Do you have enough data to see if that's accurate? Do you go back in time and check and see? 3 years ago, they said this is going to be a 20% annual return. Here's what it actually was when they exited.
So usually, yes. So when it's all said and done, we keep track. So we've got a very active Discord community, and within our Discord community, there's what we call the Addy equity tracker, and in there is a breakdown of all 42 issuances that have come onto the platform, how much equity was raised from the Addy community, how much was raised total, what percentage of the equity is in there, what types of properties are they, who the issuer is, what province it's in. All of that is there. Return projections from the beginning. And then when they do exit, it'll be like, well, here's the final result of like what happened and how close was it to what they had said or projected from the start date to the end date. Obviously, these things can change in real estate. There's good and bad. We've had 3 exits on the system thus far. All 3 have exited faster than expected. That does not dictate that that's what future ones will do. But yes, we try and be as transparent as possible so people can understand what's happened in the past. If they're only learning about Addy today, they've obviously missed 40 issuances. But they can see that information, see that detail, learn about it, and then choose to participate in the ones that they choose for the future.
One last question here about your company. And I ask this because of how proactive you are in talking about nurturing a diverse team. You wear empathy t-shirts in your video. There's a lot of stuff on the website about that. Your CEO is a proud member of the LGBTQ plus community. But on the website, at least, your board of directors is all male and looks to be all white male. That seems like a real disconnect with the image that you're trying to project.
Yeah, so I guess when we started building this business, we looked to fill our board of directors with individuals that could help us get to the goal of what we were trying to build.
I'm afraid we're out of time, Steve, but I appreciate you joining us today.
Thank you.
Steve Jagger, one of the co-founders of Addy. We reached him in Vancouver.